Hey everyone, welcome to this week's edition of Midweek Market Update. I'm Ashley Rosser with Victory Fiduciary Consulting, and today the theme of today is really just reiterating the fact that we really do remain trapped from a technical standpoint in terms of upside potential of the market. We'll get into that a little more, and I really think that the theme of this week particularly, as Jerome Powell put it best today, the only thing that it seems that we're certain of is there is an overwhelmingly level of uncertainty within the economy and the recovery. And those are his words today, that things are overwhelmingly uncertain. And that certainly goes along with what we've been saying for these past few weeks and months, just that the level of uncertainty that we have and kind of how that has impacted the markets. And so this week is a huge week in terms of earnings week. So we're going to hear from a lot of the rest of the tech mega giants that we have not yet heard from earnings. We heard Boeing today that, not surprisingly, whose revenues are down significantly. And so each day the theme has been that a lot of these companies continue to beat their earnings expectations, but when you set the bar super low to start, it's fairly easy to beat that. And so what I've been most interested in is kind of what are companies looking at for forward-looking expectations. And again, they're just, for many companies, the uncertainty remains in terms of what recovery is going to look like in the coming quarters. So some other areas of the week, though, like I said, this is a really big week, I think, just in general. We're waiting to find out what the Senate and the House is going to come up with regarding the unemployment benefits that are set to run out the end of this month, which is just 2 days away. And so, as you know, right now, Americans on unemployment are receiving an additional $600 a week to supplement the benefits that they are receiving. And so that looks like, regardless, is going away. So the $600 a week is going away. And now what it's going to be replaced with is kind of a source of contention right now between the Senate and the House, and going back and forth between what those numbers would look like and whether they could do something like 70% of one's salary, which sounds like it'll be way too complicated for them to work out in such a short period of time, how they would be able to just figure out those calculations for the state. So it looks like it'll probably be, at least at the beginning, another flat dollar amount. It's going to be much less than the $600 a week. I've seen proposals of $100 a week. I've seen proposals of $500 a month. And so that's kind of what they're going back and forth on right now. And then obviously, is there going to be an additional stimulus? So, because all of these things, these interventions, that when the government does this, it does absolutely temporarily help to boost our recovery, because much of those money that is being spent in the economy is probably coming in from benefits that were not there before. And so if we take money that we've been now giving for a couple of months and then we kind of cut that off, that's money that's going to stop flowing back into our economy. And so the same thing with the stimulus. The stimulus comes in really in hopes that we'll go back out and we'll buy things, and that will help to kind of boost the economy. But from a long-term strategy, and so we'll probably get another boost from there. But from a long-term standpoint, what's really important now is that as a country, we're able to start kind of making some estimations regarding what our recovery is going to actually look like, and things like the continued COVID surge that we're seeing. And so are we going to have to continue to backtrack or pause any further reopenings? And I think tomorrow is going to be really interesting. I'm waiting to get the newest jobs report. So every month, at the end of the month, we find out how many jobs were either added or were lost from the workforce in the past month. And so this will be the first month's report that's going to include periods where states had to backtrack. So I'm interested to see in what our numbers look like, and did we wind up losing a significant amount of the jobs that were added in May and June? So we'll see. Last week we actually increased the number of people that were filing for unemployment. It was the first time we had seen an increase in a while. And again, if that happens again this week, I think that's going to throw a huge wrench in the recovery plan, because it's showing that companies are not rehiring, jobs are not there, people are not able to go back to the jobs that they left. And so again, tomorrow I just think it's going to be a big day in general, just to continue to show us where we're falling in terms of this recovery. And so we really do remain technically trapped right now. So I've been talking for weeks about how we are kind of trapped in this area of consolidation. We've been here for months now when we look at the S&P 500. And so last week, we very temporarily broke out above that, but we fell right back down under there here. And we really just kind of stayed here now. We've tried to break out a couple of times, and then we just haven't been able to sustain it. Now, we call this right here the golden cross, and so that's where the 200 and the 50 moving day averages have crossed. And so from this point here, there's fair amount of support within the S&P 500, at least in the short term. I think that support line absolutely could potentially be violated in August or September. Those are historically weaker months of the market to begin with, and as we begin to get some more of this data and information, it's going to be something to watch. I think that for the very immediate short term, that upside risk is very limited, as we've been able to kind of break out of this consolidation area for any meaningful period of time. And so, you know, we talk a lot about the fact that this is why we have to find ways to mitigate risk, because the upside potential does not exceed, for at least the time being, what the downside potential could be, especially with another surprise in the market when we look at how overvalued things are. And so we haven't gone over our dynamic asset level investing chart in a few weeks, so I just wanted to bring that up. There's actually not a lot of change, and so fixed income remains number one. Cash is number two. So Dolly is saying that every day when we have these arm wrestle-offs, every day between all of the different stocks and bonds in the market, fixed income continues to show us that number one, cash number two. That's a very defensive stance, obviously, with domestic equities being third ranked. And so I want you to pay attention here. So we see that large cap, mid cap, technology, consumer cyclical, these are the areas of strength though within domestic equities. That's going to be important when I come back to that towards the end of what we have to say. But just to say, so not a lot has changed within our Dolly chart here that we look at when we're looking at our areas of opportunity. So last week, I was pretty intent on the fact that I was very concerned about the Nasdaq's divergence from the 200 moving day average. And so this is the Nasdaq, so these are the large tech stocks. And so we know they have been on an absolute runaway. And, you know, I've had concerns for a while. So this is their 200 moving day average here. So here's the thing about averages. In order for something to be an average, eventually this needs to trade more closely in line with that average for it to be an average. That's just the way that it works. And so we have really seen a huge divergence up here from their moving day average here for the 200 day. And so I said on Wednesday, I said, if I had a portfolio that was heavily weighted in tech stocks, I would really consider taking some gains off the table. And so that was Wednesday, and then we know that Thursday and Friday we saw that big sell-off in tech, and that sell-off actually continued Monday and Tuesday of this week as well. And so, and I think we are still completely overbought when we look at tech. So, but obviously that happened, that we had reached kind of a tipping point that I saw Wednesday morning as I was looking at the charts, realizing that a short-term correction was imminent. I think when we look at the Nasdaq, of all of the areas that we see that have heightened risk, which we think all of the indexes right now have heightened risk, the Nasdaq for sure has the most. So just something that I would be keeping an eye on right now in terms of risk versus reward in my portfolio. I would not want to be heavily weighted right now in the Nasdaq. So I've been promising you that when the time came that we were going to re-enter the market, that we would be doing so tactically, very methodically, and that I will let you know as soon as we did. So last week, actually, as we saw that reversion kind of begin to happen, it actually gave us an entry point into 3 different areas of the market. These are areas that are very tactical. They're narrowly focused, and so I'll get into that a little bit. We took 5% holdings in each. So right now, within our tactical, 3 out of our 5 tactical models, our 2 most conservative models, we have left as is, just because they were majority already very in cash and cash-like investments to start with. So we are going to leave them there for now. But for the other 3, we took 5% holdings, and so the areas that we took holdings in would be consumer cyclicals. And so specifically the area that we are in is an area that really focuses on online shopping, online retail. And so with the thought being that even with a secondary shutdown pausing the economy, as Americans, I think we've really began to shift the way that we live. And so what we found out during the pandemic was that we were actually able to do most things remotely or order most things remotely, that we didn't actually have to go anywhere. And I think that that's going to stay with us. I think that's going to be a behavioral shift that we will see in the future. And so as we saw this particular area of the market we've been watching for weeks, and said that we thought that this was a good opportunity. Relative strength was very high, positive momentum, not completely overbought. That's another thing. We want to find an area that has not completely reached the top of its cycle. We want to make sure that there's opportunity in there for us, and we saw that this was. So this was one of the holdings we chose. We also chose a very specific technology stock that is, it focuses on innovative technology. It's a lot of work from home technology. So again, very focused on the fact that we 100% believe that there's going to be additional retractions, corrections, reversions in the market. Certainly in the next few months, that possibility is still very high. This is an area, again, though, that even if we needed to pause reopening, backtrack, or some states need to go back on lockdown, these are areas that will continue to do well. And so that was the second area. Third area is an industrials sector focusing on new home building. And so that may seem surprising, but believe it or not, new homes are actually, the numbers are very reassuring in terms of the number of Americans that are looking to build new homes. And we have to build so many new homes a year just to keep pace with our needs as a country. And so we're actually, because of the pandemic and different things, we're actually behind on that right now because a lot of things had to shut down. And so we're beginning to see an uptick in that area now. And also, people who live in cities, another trend that we're seeing as a result of this, they're moving from the cities and they want to go into suburban communities now. They've realized that they don't necessarily, especially families, what we're seeing, they may not want to be in these more populated areas. And so again, this was an opportunity of an area that was not completely overbought, that gives us good opportunity. All three of these specific funds that we chose, they have relative strength scores of over 5, so 6 is the best. So you want to get as close to a 6 as possible out of a possible score of 0 to 6. And so these are all more than 5. They're showing positive momentum. They're not at all-time highs. They are not completely overbought. So when we look at their overbought, oversold ratios, so we think that these are good areas that even in the midst of corrections and pullbacks, that these would be good positions for us to hold. And so that was the reason why we went with those areas. Again, as we expect to see additional, reversions and corrections, and as we do, that's going to be great. So don't get discouraged if you see that all of a sudden we're having some significant sell-offs. We're anticipating that. And then we'll be able to, number one, add some other holdings where we feel like then some of the risk would be kind of off the table. Number two, we may increase in the holdings that we have right now. So right now, that's kind of the big story that I wanted to share with you, that we did re-enter the market last week. Again, I kind of almost equated to just taking small bites of the apple at a time. Again, trying to be methodical, understanding that there is still significant risk out there. A lot of that initial aggressive intervention from the Federal Reserve has really helped to kind of prop up the market, but it's also really muddied the waters. It's made it very difficult to understand, in some ways, kind of reality versus not, and it's made some of the technicals and different things a little more foggy as well. And so I think that we're going to continue to hold the course, and again, we're excited though to be able to have some of these smaller positions and begin to increase performance. So we'll take what the markets will give us. Remember, that's kind of what our mantra always is. So I thank you for joining us. We'll look forward to joining with you next week. Please get back to me with any questions that you have or feedback. Otherwise, stay safe, be well, and we'll see you next week.